How much is life insurance for a 55-year-old? Well, it's different than you are going to think about it. Now, if you have medical conditions, that might be a problem, but I brought an expert to this conversation today, and I'm going to interview Jason Henderson, who's my partner in Insurity Systems, and we're going to dig deep into insurance and how to use it to build wealth if you're 55 years old. So the three things I'm going to talk about with Jason is the changing landscape of insurance for 55-year-olds. Number two, how do you secure the best rates and get the best coverage given you actually have a shorter time period that you'll be contributing to the insurance policy? How do you borrow against it and really grow it? And then number three, the big costly mistakes most people make when they get into insurance and then they get out, and I just see all this jagged movement, which is causing the policy to fall apart. So let's go check in on a quick interview with Jason. So Jason, welcome back. Jason Henderson, my partner in Insurity Systems, and we're going to talk about insurance, specifically life insurance and the changing landscape, specifically, Jason, for 55-year-olds. For some reason, there's a whole bunch of search terms, and a lot of 55-year-olds want to know what is the changing landscape for life insurance for 55-year-olds?
The number one thing is every day they're getting older. And as you age, the cost per thousand of life insurance goes up every year you get older. So when you get to the age of 55, of course, it's a lot higher than age 25. Let me give you an example. Let's say you wanted $1 million face amount of a whole life insurance. At a 55-year-old, you're looking at $25,925 a year. In the event you could have started that at age 25, that's $7,435. There's a huge difference. Another thing which adds into this and why it's more expensive is the propensity or the probability of poor health assessments or death occurring. As you get closer and closer to that magical age, when it's statistical, is the human life expectancy in the United States, the cost of per thousand is going to go up. Simple math. That's the way it happens. And so you also have to realize that it's going to be the same difference, whether that's whole life insurance or death insurance, as we normally refer to it as.
Well, and how do you secure the best rates and the coverage? I mean, so somebody's watching this, you're 55, you might be watching this, your parents 55, or you just have some friends that are. How do you get the best rates?
Well, there really are no deals in life insurance. You're dealing with simple math. You're dealing with, say, 10 million lives. What's the probability of so many people dying this year and the next year? You know, the difference between a mob boss and an actuary at an insurance company is the mob boss can tell you who's going to die. The actuary is going to tell you how many are going to die. They know it's really good math when you're dealing with large numbers. And so when you're saying what's the best rates, the best rates really have to do with your health, right? The better health you're in is the better rate you're going to get. So that's why the rates are going to go up year to year, for the fact that people, as they get older, there's more of a chance of them being sick or to have some sort of condition, whether that's kidney failure or diabetes or cancer, whatever it is.
Well, and how are at 55, let's just say someone has one of those pre-existing conditions. I think there is some misconception. I mean, are they insurable at all, or is just the rates going to be higher? Because I know when I did mine young. I mean, they had to like speed up and elevate a treadmill to get my heart rate even high enough, because I got premium healthcare when I actually went through my exams to get, really loaded up. But if you miss that period, or you're not in great health, what happens with pre-existing? Just more costs?
Right, more costs. And really, most of this discussion is all driven by death insurance. There might be some different rates that can happen with death insurance. When it comes to whole life, there's very little difference from company to company. It really depends upon their age and their health status. You can fool around with different things when a product is really profitable, such as term insurance, and you might say, well, we're going to buy some business by having cheaper rates. That's not going to happen with whole life insurance, for the fact the death benefit is certainly going to be paid out. With term insurance, there's this probability of it not being paid out. In fact, it's greater than 99% of all term insurance policies never pay out a death benefit.
Because they expire?
Right.
So I wouldn't even go down the whole death insurance, because that's got so many other problems. But for most of you, if you're not aware, that's what you're being marketed to on every TV channel. You know, all of those cheap for $15 a month, you can get a $500 policy. All those, what we're talking about, are death insurance. Anything that cheap, it's high margin to them, because most people, as Jason and I both know, they get it, they forget it, it expires, and now they're older with existing conditions and they've got to start over. So before we continue our conversation and give you a whole bunch of gifts, I want you to subscribe to our channel if you haven't done that yet. Click that notification button so you're here 5 days a week. And literally anyone 5 years old or older, this is a family channel and is built for business and money education. We have brand new learning journals. I don't even know if you've seen these, Jason, brand new, that came out. So make sure you grab it. And this would be a great time to open one up and say, this was the video on whatever day you're watching this video with Jason, what you learned about insurance, what you're going to do about it. So in this case, what you're going to do about it is you're going to go to uncertaintysystems.com and you're going to grab our free report. You get a chapter of my book and another book, and you're going to sign up, most importantly, for a strategy session to talk with Jason and some of our top experts. So we can really see whether you're 55 or not, what can we do for you? Anything you want to add to those free gifts before we go to really misconceptions that go on?
No, you did good there.
All right. So all of you, make sure you take advantage of these strategy sessions. Don't just make assumptions. And the worst due diligence is you just hunting, pecking around the internet, and then you, without enough knowledge, trying to figure out what's accurate. I was called, the internet, the bathroom wall, because there's so much stuff, and I'm going to say over half of it's wrong, or just trying to get you to buy something for high commission. So be very careful out there. The internet is not your due diligence portal. Talking to real people with real experience and sustainability is your real portal to how do you make decisions. So with that, Jason, let's talk about the mistakes, the costs, the misconceptions of getting insurance at 55.
Well, one of the is people think, oh, it's too expensive. No, like was said in another episode, the most expensive life insurance is the life insurance you don't have when you pass away, right? You need life insurance at any time in life. You need life insurance your whole life. It doesn't matter whether you're 25 or 85. So it is not too late at age 55. Especially when you're in good health. Will premiums be higher for a 55-year-old than a 25-year-old? Yes, per thousand. However, one of the things that Loral and I like to do is we like to design a whole life insurance policy for cash accumulation, not so much for the death benefit. And it's then that cash accumulation and the use of that cash accumulation that allows you to actually grow your death benefit every year and increase your cash, which allows you to use that money and invest in, hopefully, in alternative type investments that can give you high rates of return and also build your cash values. There's another idea that briefly mentioned that, well, I'm going to have insurance until I don't need insurance anymore, right? That's what common radio talk show hosts and other people say, I only need insurance until I can insure myself. Think about that. Let's say I have $1 million death policy, death insurance, and it's going to expire on my 65th birthday. But at age 65, I can self-insure. You're telling me that the beneficiaries are going to be happy in the event the day after my 65th birthday, and there's no $1 million death benefit, that they're going to be happy, or they're going to be in a situation where they can take care of all estate taxes or anything else? That's just simple stupidity. It's improper to be saying that. You need life insurance all the time. And so the idea that you don't need life insurance at age 55 is simply not correct.
So again, go to uncertaintysystems.com, sign up for an appointment, and see what your options are, what the cost would look like for you, and given what your health, what you've done to yourself. And for some of you, if it comes in high, go get healthy. What a novel concept. So you can do anything you want. You just have to want it. So go to uncertaintysystems.com, grab that schedule, grab an appointment on Jason's schedule, as well as the gifts we have there. If you ever have a question here on my YouTube channel, go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow.